Chase Sapphire Preferred Review, the honest truth. Before we dive in, some ads may appear during the video. Your support allows this channel to keep sharing valuable information for free. Now let's dive in. Let me be direct with you. The Chase Sapphire Preferred is the most discussed mid-tier travel card in the USD market. And yet the vast majority of the people holding it have never actually run the numbers on whether it is earning them money or costing them money. This review is not a promotional walkthrough. It is an honest, institutional-grade stress test of the Chase Sapphire Preferred against real-world spend profiles, the kind of analysis a fee-based financial advisor would charge to perform. By the time this video ends, you will know exactly whether this card belongs in your credit portfolio, what the true annual fee ROI looks like across 3 different spending archetypes, how the Chase Transfer Partner ecosystem functions as a liquidity mechanism rather than just a perk, and where the Sapphire Preferred structurally underperforms relative to its closest competitors. No hype, no affiliate pressure, just the honest truth, which is exactly what the title promises. Before we go any further, if you have ever paid an annual fee on a card and could not tell me within 30 seconds whether you came out ahead or behind, this analysis was made for you. The framework I am walking through today is the same cost of capital assessment that institutional treasury teams apply to every financial instrument they hold. Credit cards are no different. They either justify their cost or they do not. To evaluate anything honestly, you have to understand what it is designed to do. The Chase Sapphire Preferred product architecture is built around one core value proposition: converting everyday travel and dining expenditure into transferable point currency that can be deployed across a network of airline and hotel partners. The annual fee in USD sits at $95, which is the first number we need to stress test, not accept. That $95 is your cost of capital for access to the entire reward structure. Every analysis starts there. The earn structure gives you 3 points per dollar on dining, 3 points per dollar on select streaming services, 2 points per dollar on all other travel, and 1 point per dollar on everything else. There is also a 10% anniversary point bonus, meaning Chase adds 10% of your total points earned during the year back to your account at renewal. That anniversary mechanism is something most cardholders overlook entirely, and it materially affects the true effective earn rate for high-volume spenders. Here is where the honest truth begins. The Chase Sapphire Preferred Spend Profile Analysis reveals 3 distinct cardholder types, and the card delivers vastly different value to each of them. Let us work through all 3. The first archetype is the moderate spender, someone putting roughly $12,000 to $15,000 annually on the card, split across dining, travel, and everyday purchases. For this profile, the math works cleanly. At an average blended earn rate of approximately 2 points per dollar, that cardholder is generating somewhere between 24,000 and 30,000 Chase Ultimate Rewards points annually. If those points are transferred to a partner like United Mileage Plus or Hyatt and redeemed at full transfer value, the conservative point valuation, which most institutional analysts peg at between 1.5 and 2 cents per point, places the annual reward value between $360 and $600. Against a $95 annual fee, the net positive return ranges from $265 to $500. That is a demonstrably positive ROI, and the card justifies its cost for this profile. The second archetype is the infrequent traveler, someone who primarily uses the card for dining and everyday purchases, but rarely books travel directly through Chase or transfers points to partners. For this profile, the Sapphire Preferred starts to show structural strain. If points are redeemed through Chase Travel at the 1.25 cents per point rate, rather than transferred to partners at potentially higher values, the effective earn rate compresses significantly. The $95 annual fee remains fixed while the realized reward value declines. For cardholders who are not actively managing point redemption strategy, the Sapphire Preferred's cost basis is often higher than the value returned. And in that scenario, a flat 2% cashback card with no annual fee would historically outperform it on a net dollar basis. The third archetype is the high-volume business traveler, someone charging $40,000 or more annually across travel and dining categories. For this profile, the Sapphire Preferred is genuinely underbuilt. The earn rates do not scale with spend in a way that justifies holding the Preferred over the Chase Sapphire Reserve, which carries a higher annual fee but delivers 3 cents per point on travel redemptions through Chase Travel, a $300 annual travel credit, and Priority Pass lounge access. For executives and business owners in the spend tier, the Sapphire Preferred is a transitional instrument, not a permanent one. This is the section that separates institutional analysis from surface-level card reviews. The transfer partner liquidity framework around the Chase Sapphire Preferred is the single most important feature the card offers, and it is also the most misunderstood. Ultimate rewards points are not simply rewards. They are a form of financial optionality. When you accumulate ultimate rewards points, you hold the ability to convert that currency into airline miles or hotel points across 14 transfer partners at a 1-to-1 ratio, meaning one ultimate rewards point becomes 1 mile or 1 hotel point with the partner of your choice. The liquidity implication is this: if you accumulate 100,000 ultimate rewards points, you do not have a fixed dollar value. You have a range of potential values depending on your redemption pathway. A transfer to World of Hyatt for a Category 7 property redemption can return 5 to 7 cents per point in hotel value, meaning that same 100,000 points may represent $5,000 to $7,000 of accommodation value. Contrast that with a cash redemption at 1 cent per point, and you understand why point transfer optionality is an institutional-grade mechanism, not a coupon. The practical implication for the 45 to 75 demographic watching this is significant. Many of you are approaching or are already in a phase of life where international travel, whether for leisure, to visit family abroad, or to manage international business interests, is a meaningful expense line. The Chase Sapphire Preferred's access to transfer partners like British Airways Avios, Singapore Airlines KrisFlyer, and Air France Flying Blue means you have currency that routes efficiently onto international carriers without the foreign transaction cost drag that non-travel cards impose. That is a real cost avoidance mechanism expressed in GBP and CAD equivalent savings for those traveling between North America and Europe or within international corridors. Honest analysis requires naming the structural limitations of the Chase Sapphire Preferred directly. First, the travel credit situation. Unlike the Chase Sapphire Reserve, the Preferred does not carry an annual travel credit that directly offsets the annual fee. The $50 hotel credit offered through Chase Travel is a partial offset, but only if you book hotels through Chase's portal, which in many cases does not offer competitive rates relative to direct hotel booking or third-party platforms. For cardholders who prioritize hotel loyalty status or direct booking benefits, this credit is often unrealizable in practice. Second, the earn rate on non-category spend, 1 point per dollar, is structurally weak in the current USD credit market. a no annual fee flat rate card generating 2% cash back on every dollar spent outperforms the Sapphire Preferred on any expenditure that falls outside the dining and travel bonus categories. For business owners or executives whose largest expense categories are office supplies, professional services, advertising, or payroll, none of which fall into the Preferred's bonus categories, the opportunity cost of using this card over a category-matched business card or a flat-rate instrument is measurable and real. Third, and this is the part the card's marketing does not discuss, the Chase 524 rule creates an acquisition cost for the Sapphire Preferred that extends beyond the annual fee. Chase will typically not approve applicants who have opened 5 or more new credit accounts within the prior 24 months. If you are actively managing a credit portfolio for either personal or business purposes, accepting a Chase Sapphire Preferred application counts against that threshold, which means holding this card has an opportunity cost measured in future Chase approvals foregone. The most underappreciated strategic dimension of the Chase Sapphire Preferred is its position on the Sapphire Preferred upgrade to Reserve pathway. Chase allows cardholders to product change from the Preferred to the Reserve without a new application, meaning no new hard inquiry, no new account opened, and no disruption to the existing credit line's age contribution to your credit file. For cardholders who open the Preferred at a stage when their spend profile fits the mid-tier card, then grow into the high-volume archetype over 12 to 24 months. This upgrade pathway preserves the relationship age with Chase while accessing the Reserve's superior earned structure and travel credits. The tax timing implication here is worth noting for business owners. If you are using the Sapphire Preferred to manage travel expenses on behalf of an S-Corp or LLC, the points earned technically belong to the individual cardholder, not the entity, which creates a nuanced tax position. The IRS has historically treated credit card rewards as rebates rather than taxable income in most personal use scenarios. But the treatment of rewards earned on business expenditures reimbursed by an entity requires consultation with a qualified tax professional. This is not a reason to avoid the card. It is a reason to structure the expense and reimbursement methodology deliberately from the outset. No review of the Chase Sapphire Preferred is complete without placing it in competitive context. The most direct structural competitor in the current USD market is the Capital One Venture X, a card that charges a higher annual fee of $395 but delivers a $300 annual travel credit through Capital One Travel, 10,000 anniversary bonus miles, and 2 miles per dollar on all purchases with no category restriction. When you net the Venture X's annual fee against its credits and anniversary miles, the effective out-of-pocket cost is frequently lower than the Sapphire Preferred's $95 fee for cardholders who can realize the credits. The Sapphire Preferred versus the Capital One Venture X comparison ultimately resolves around one variable: transfer partner preference. If your international travel corridors align with Chase's transfer partners, United, British Airways, Hyatt, Singapore Airlines, the Preferred's ecosystem is superior. If you prioritize Capital One's partner network or value the simplicity of flat 2 times earn on all purchases, the Venture X wins the cost of capital analysis for mid to high volume spenders. These are not equivalent cards competing on the same axis. They are different tools serving different portfolio strategies. Before we end, let me summarize the most critical insights from this entire review. First, the Chase Sapphire Preferred justifies its $95 annual fee most cleanly for the moderate spender, putting $12,000 to $15,000 annually across dining and travel. Below that threshold, a no annual fee cashback instrument typically wins on net dollar return. Second, the transfer partner liquidity mechanism, not the earn rate, is the card's most valuable institutional feature. Realizing 5 to 7 cents per point through Hyatt or premium airline partners is where the Sapphire Preferred generates disproportionate value relative to its cost. Third, the 1 point per dollar earn rate on non-category spend is a structural weakness. If your largest expense categories fall outside dining and travel, the Sapphire Preferred is earning at a rate that is historically underperforming relative to flat-rate alternatives in the current market. Fourth, the 524 rule creates an invisible opportunity cost. Holding this card consumes a Chase application slot that may matter more in your broader credit portfolio strategy than the card itself. Fifth, the product upgrade pathway from the Sapphire Preferred to the Reserve allows you to grow into the premium tier without a new hard inquiry, a meaningful advantage for cardholders managing their credit file strategically. Sixth, business owners using this card for deductible travel expenses should establish a clear reimbursement and substantiation methodology consistent with IRS documentation standards before running significant business expenditure through a personal instrument. Consult with a qualified tax professional for guidance specific to your entity structure. Here is the honest verdict. The Chase Sapphire Preferred earns its place in a credit portfolio as a mid-stage travel card for cardholders who are actively using Chase's transfer partner network, spending meaningfully in dining and travel categories, and treating the card as a bridge toward the Sapphire Reserve rather than a permanent holding. It is not the best card on the market in any single category. It is not the best cashback card. It is not the best premium travel card. And it is not the best business card. What it is, when used correctly, is an efficient entry point into one of the most valuable point transfer ecosystems in the USD credit market at a cost of capital, $95 annually. That is recoverable within the first 1 to 2 months of disciplined spending for the right profile. If you are a moderate spender with meaningful dining and travel expenditure, and you are committed to transferring points rather than redeeming through the Chase portal, this card earns its cost. If you are a high-volume spender, move to the Reserve. If you rarely travel, run the numbers on a flat-rate cashback card first. That is the honest truth. Please subscribe for more free institutional-grade analysis and credit card strategy that you will not find anywhere else on YouTube. Please click the thumbs up button to like if this video has delivered real value. And drop your questions or future content requests in the comments below. They directly shape what gets covered on this channel. Disclaimer: I am not your financial advisor. This content is for educational purposes only. Consult with qualified professionals before making any financial decisions.